Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe. I'm a Forbes contributor covering social entrepreneurship and impact investing. And we have today for the show a great social entrepreneur and impact investor, Rodney Schwartz, the CEO and founder of the largest impact investment bank in Europe, ClearlySo. Rodney, welcome to the show.
Thank you. It's great to be here, Devin. Thanks for inviting me.
We're thrilled to have you all the way from London. It's an honor to be connected with you, and really appreciate you taking the time to do this. You just recently...
Well, thanks very much for the invitation.
Yeah, we're excited to have you. You just announced the launch of Atlas, a new product or service that helps private equity managers and venture capitalists measure their impact. And this seems to me a vitally important step forward in impact investing. Tell us about Atlas.
Well, I think it's really important, Devin, that the mainstream starts to think about impact. They think about return a lot. They think about volatility or variability a lot. But it's only now starting to be the case that they're thinking about impact. And Atlas is a tool which will enable mainstream investors, private equity firms and venture capital firms specifically, to look at, understand, and measure their impact, and also to assess it against other firms. So we're very excited about that.
So is this, give us just a little bit more detail about the tool itself.
Well, the tool itself is designed to be a couple of things. Very easy to use. It requires very little intervention on the part of the portfolio manager. So no portfolio manager is going to be needing to fill out lengthy questionnaires, which is often the case in the ESG market. Their entrepreneurs are not going to have to bother. ClearlySo, through Atlas, will do all that work and put all the data and information available through a portal for those portfolio managers and for those chief investment officers, so that they can look at their portfolios and understand the impact, maybe even by fund manager, of every single company, of all their different funds, and understand the impact, not just in totality, so what is it across the company, the investee company, but in addition, what is it for different funds that they manage, what is it for their whole organization, and even what components of impact. Where do they score on health? Where do they score in the environmental area, social issues, etc.? So it's very robust, but it's designed to be efficient, effective, not very intrusive, and critically inexpensive to the private equity firm.
So what's the revenue model for you with this program?
The revenue model is very simple. Each individual private equity fund manager pays us a small membership fee. And in addition, for every single company they want assessed, they pay us in a small per company charge. I'd rather not give out those numbers on the internet, but if they contact us, I think people will be surprised by how moderately priced it is. And that was really critical. When we developed the thought of doing this years and years ago, and this is really 5 years in the making, clear that cost was going to be a critical factor. We didn't want to develop something that was going to be so complex that it was going to be really expensive and nobody would ever want to pay for it. So this is something that's very modest in cost, and we will just get a fee up front for doing the research, but it will be very modest, but will enable us to make a small profit on each transaction.
Who are the users?
And as more and more private equity... Sorry?
So who will be using the data?
Go ahead. The data will be used by people at the fund management organizations. So in the United States, in the United Kingdom, all across Europe, private equity firms are very interested in impact. They're interested in avoiding negative impact, and they're interested in backing companies that have positive impact because they think they'll make more attractive sale prospects in the aftermarket. It will be the individual fund manager who will look at the information provided by Atlas and will get information about where the company is maybe doing really well from an impact perspective, and it will be available to him or her online through a portal. Or in addition, what are some of the problem areas and what are some of the things that that portfolio manager might do about it? That's something that the portfolio manager could then share with the investee, And it's something that the chief investment officer might use as a mechanism to manage that individual portfolio manager and compare how that portfolio manager is doing from an impact perspective with how the other portfolio managers are doing. Maybe it can become part of the compensation system of firms that say they care about this sort of thing. Is that addressing your?
Yeah, so there are layers of investment in the market, which you understand far better than I, but there are people who are investing directly in companies, people who are making investments in funds who invest in companies, and people who are investing in people who make investments in funds who make investments in companies, and so on, right? Where in
Let's
that
look at the whole chain
are people using your product? Where are they using Atlas?
The really great thing is that people will be using it across the value chain. So again, they don't need to do a lot of work. We do all that work for them. We give them the information available online through a portal that's very, very attractive. And a lot of engineering has gone in to making it really simple. And I take my hat off to my colleagues, in particular Lindsay Smart, who developed this. So this portal will enable portfolio managers to understand the impact and the dynamics of that impact and the components of that impact for every single company. The portfolio manager could then use it to report to their chief investment officer. Their chief investment officer might share it with their head of marketing. Their head of marketing will share it with the limited partners and the people who are in funds of funds that invest in the private equity funds, that invest in the companies that we're talking about. And private equity firms and venture capital firms are a critical aspect of the marketplace because they are really great stewards of long-term value creation. It's not like in the listed equity markets where people might own something for a few months or a few weeks or a few hours. These are people who own something for 3 to 7 years, and they really are about building value. So this is a tool that they're going to be used up and down the chain to inform their decision-making process. The information will not be shared with the public. It's an internal tool for the private equity and venture capital firm to use.
Now, one of the aspects of the tool that caught my attention is this idea that the tool would be used not only by venture funds and private equity groups that are intentionally focused on impact as a strategy, but that it would also include those who don't. The mainstream private equity venture capital folks act as a strategy.
Yes, that's what's really critical. And it's a critical aspect of ClearlySo and the way it operates. The total impact investing market is probably under $100 billion. The total pool of investable assets in the world is between $100 and $150 trillion. The point isn't to focus on the 100 billion that's already committed. The point is to focus on the other 125 trillion that isn't. This tool is designed specifically for mainstream private equity and venture capital firms. Those who are already impact oriented have very costly and very expensive tools, and it's a key part of their product offering. But what ClearlySo is about is connecting the mainstream with impact. Because frankly, unless we can tap into that $125 trillion, we're just not going to solve global problems. And we think this is a tool which will enable that mainstream market to focus on impact and I think make society better as a result.
Yeah, very, very important, very exciting. You know, that's a great segue to a broader question about impact investing and how you see the market developing. Give us a sense of what you see there in Europe, how that compares to the US, and what are the major trends you're seeing?
Yes, I should point out to your listeners, Devin, that even though I probably sound like a Yank, most of my career has been here in the United Kingdom. So I'm almost 60, I'm 59, and I left the US 30 years ago. So I had about 7 or 8 years of my career at Paine Webber in the United States, but most of my observations will be about the European market and in particular the UK market. Seeing, especially now, is that mainstream investors are starting to get involved. There was a hedge fund recently called Cheney Capital, which decided to start a social property fund. It's probably one of the first of its kind in the whole world to focus on impact and delivering really decent returns. People want to have their cake and eat it, and it's frankly very possible because we think that really good companies can actually deliver really good value and significant impact. In fact, we believe, we're confident, financial return and impact are actually positively correlated. I think you also have a recent example in the United States of a firm, of a fund being launched by TPG. I don't know if you want to talk about that fund.
Yes, it was a huge announcement. I saw just yesterday or the day before, Bono's involved, $2 billion, huge fund. What's your take on that?
Well, I expect nothing but big when it comes to the United States, so the size isn't surprising. And it's great that Bono's involved. I guess that adds a bit of celebrity factor to the fund. But $2 billion is great. It means that the market for impact funds will grow by at least 2%. But the fact that a firm as fine and as excellent and well-run as TPG is involved, and a really good fund manager, William McGlashan, I think he's called, is running that fund, this will prove to the marketplace, prove to mainstream investors that you very much can have your cake and eat it. You can deliver really excellent returns, but make sure that at the same time as you're getting good risk-adjusted rates of return, you can deliver impact. You can deliver companies that are doing things that are making the world a better place. And I think with firms like TPG, with Cheney Capital involved, there are several other companies here in the UK and across Europe that I'm aware of that are in the process of being about to launch impact funds. AXA, the large Paris-based insurance company, is already on their second private equity fund of funds all about impact. There are other organizations like Partners Group based in Switzerland who are involved. So all around the world, some of the best firms are actually starting to really focus on impact and providing funds that prove you can have your cake and eat it and do well as you do good.
The will, simply stated always as a double bottom line, but it is exciting to see that developing, growing, and expanding. I appreciate your take on that. Rodney, you are a role model to a lot of people. You've been, in the financial world with a number of successful efforts, venture capital, investment banking, etc. Who do you look up to as a role model?
Well, it's funny you say that. I mean, some of the firms I was involved with were certainly not successful. So although I left in 1994, I used to be head of equities in Europe for a firm called Lehman Brothers. I think it's hard to call that firm in any way successful.
Fair point.
So I think I learned a lot at those firms. I think there was some exciting skills that my colleagues there and at Payne Weber and at Paribas helped me to acquire. But to be frank with you, if I were to think of the people that I really admire, they weren't at investment banks. The people I really admire are people like Anita Roddick, who had a really great idea for a great business and not only demonstrated that she could build a great business, but almost changed the way we thought about consumer products. So she was able to build a very valuable company, eventually sold for something like 652 million pounds, which used to be worth a lot more than it is today, given how the pound has slipped. And at the same time, was an active campaigner for environmental causes, for organic causes, for fair trade causes. And what I also really admire about her, and I had the privilege to know her personally, was that she never stopped being a great person. She was the sort of person who would spare time to meet with young people and to kind of share her thoughts with them and inspire people. So I admire her partly because of what she accomplished, but also because she never turned into a jerk. She was always a warm, compassionate, sincere, caring individual. And I think people like that are just so rare. Money does ruin people in certain occasions. I know some great entrepreneurs at a business here in the UK called Just Giving, run by a woman called, two women actually, which makes it a rather unusual business, a woman called Zareen Karras and a woman called Anne-Marie Hubie. And they too have built a great and extremely valuable business, actually facilitating charitable giving online. And yet they're humble, their feet are on the ground. And there's a story, if you want me to share, about how fundamental Just Giving was in the formation of ClearlySo. Should I share that story?
Yes, please share that story. That'd be great. We'll end on that great story.
Okay. Fine. So this goes back to about 2003. And I was chairman, the first non-executive chair of Just Giving, which, as I said, is a platform to help people give money to charities online. And at the same time, I was chairman of a large national charity here in the UK. It's probably better if I keep their name out of it. Anyway, that second experience, and this was part of my desire to take the tools that I'd acquired at firms like Lehman Brothers, do some good with them, to do something that frankly made my children proud of me and made me feel proud rather than just another banker at Lehman Brothers. So I started to get involved in a range of things. And I thought, well, charity, that makes sense. And what I could tell you was that it was a really experience for a whole variety of reasons, which I'm not going to go into. But I thought in terms of impact relative to the amount of money going into that charity, it was excruciatingly depressing how I valued that. By the same token, here was this small little company called Just Giving with about half a dozen employees. And all it had was about 5 or 6 million pounds of early stage startup capital. And they changed the way charitable giving happened. They now have facilitated something between $4 and $4.5 billion of charitable giving through their platform. They've created a company which has taken that 5 or 6 million, and it's now probably worth well in excess of 100 million pounds. So they've proven that you can actually have a lot of impact and also create something that's really valuable for the shareholders and the staff and the employees that put time and effort into it. And when I saw the contrast between this charity and Just Giving, which was an entrepreneurial model, I thought, now I know what I need to do with my life. I need to take my toolkit and try to develop something which enables 100 Just Givings to grow and to prosper. And that was the idea behind ClearlySo. What can we do to create 100 businesses like Just Giving?
Now that's great. That's a brilliant strategy and huge impact to replicate, duplicate, and expand. So, Rodney, before we go, and I thank you very much for taking the time to be with us, tell us how people can learn more about ClearlySo and connect with you personally.
Well, the best way to learn about ClearlySo is to go on the website, www.clearlyso.com. If you're interested in connecting via Twitter, it's just @ClearlySo. And for those people who want to connect directly with me, I'm at Rodney Schwartz on Twitter, and be delighted to connect.
Fantastic. Well, Rodney, thank you very much for taking the time to be with us today. We wish you every success in continuing to scale good.
Well, thank you very much. It's been a pleasure to be with you. And let me wish you and all your viewers a Merry Christmas and a Happy New Year.
Thank you very much. Now, let's do some good.